Welcome back to the Global Business Channel. Thank you for joining us once more for our 40th video. Today we'll be discussing certificates of incumbency for companies and legal entities. First, we'll go over the definition. Second, we'll delve into the common content of such certificates. Third, we'll look at their purpose and use cases. Fourth, we'll cover who uses them. And lastly, we shall go over their importance in the corporate, financial, and legal worlds. We publish weekly videos on topics related to the offshore global business, corporate, financial, and compliance sectors. We encourage you to subscribe to the channel and give this video a thumbs up if you find these topics interesting. Lastly, for ease of reference, all videos are arranged in playlists which we have created on various subject matters, so feel free to browse through them. Without further delay, let's get started with today's video. Definition: a certificate of incumbency is an official document issued by a company or corporate entity that lists the current officers, directors, and sometimes shareholders or members of a company. It serves as formal evidence of the identities and positions of the people holding key roles within the organization at a specific point in time. Content of a certificate of incumbency. A typical certificate of incumbency includes names and titles. The names of the company's current directors, officers such as the CEO, CFO, and secretary, and sometimes key shareholders. Appointment details, the date of appointment to their respective roles. Signatory powers, details of who has the authority to sign documents on behalf of the company, such as contracts or financial instruments. Corporate seal, many certificates of incumbency will bear the company's corporate seal to authenticate the document. And other company information, details such as the company's registration number, registered address, and sometimes the jurisdiction of incorporation. And lastly, certification statement. That is a statement certifying the accuracy of the information by an authorized individual, typically a company officer or secretary. Number 3, purpose and use cases. Verification of authority. Banks and financial institutions. When a company wishes to open a bank account, apply for a loan, or conduct significant financial transactions, banks often require a certificate of incumbency. This certificate verifies the identities of the individuals authorized to manage the account and conduct business on behalf of the company. Legal transactions. In legal matters such as signing contracts or entering into agreements, a certificate of incumbency is used to confirm that the individuals signing the documents have the proper authority from the company. Compliance and due diligence. Regulatory bodies and compliance departments often require a certificate of incumbency during audits or investigations to confirm that the company's records align with its current operational structure. Trust and confidence in business transactions. Third-party validation. In international trade and business transactions, third parties may request a certificate of incumbency to ensure that they are dealing with the legitimate representatives of a company. This is especially important in cross-border deals where the counterparties may not have direct knowledge of each other's corporate structures. Proof of identity. The document serves as proof of identity for corporate officers in various dealings, reducing the risk of fraud by ensuring that only those with actual authority are representing the company. Number 4, who uses certificates of incumbency? Internal users, corporate secretaries. Often the corporate secretary or an equivalent officer is responsible for preparing and maintaining the certificate of incumbency, ensuring that it is updated regularly as officers and directors change. Board of Directors. Members of the board may use the certificate to confirm the current structure and ensure that the correct procedures are followed in corporate governance. And external users. Financial institutions. Banks and lenders use the certificate to confirm that they are dealing with the authorized representatives of a company when processing loans, opening accounts, or executing other financial transactions. Legal professionals. Lawyers and legal consultants may request a certificate of incumbency to ensure that their client is compliant with regulatory requirements and to validate the authority of the signatories on contracts or legal documents. Business partners. Potential business partners or investors might require the certificate as part of their due diligence process to verify the legitimacy and authority of the individuals they are negotiating with. Number 5, importance of certificates of incumbency. Legal and financial safeguard. Mitigating risk. The certificate provides a safeguard against fraud and unauthorized actions by ensuring that only duly appointed individuals can represent the company in legal and financial matters. Compliance assurance. It helps companies remain compliant with both local and international laws by providing a clear, verifiable record of its current leadership and authorized signatories. Facilitation of business transactions. Streamlining processes by providing clear and authoritative proof of who is in charge. The Certificate of Incumbency simplifies many processes that involve third parties, such as setting up bank accounts, signing contracts, or engaging in cross-border trade. Team and trust building. It builds trust between companies and their partners, investors, and financial institutions by providing transparent and verifiable information about the company's key personnel. Record keeping. Corporate governance. Maintaining an accurate and up-to-date certificate of incumbency is a key aspect of good corporate governance. It helps ensure that the company's leadership and its powers are clearly documented, which is essential during audits or legal reviews. Historical record. The certificate also serves as a historical record of the company's governance, providing insight into who held key positions at specific times, which can be important for resolving disputes or conducting internal reviews. In conclusion, the Certificate of Incumbency is an essential document in the corporate world, providing proof of the current officers, directors, and sometimes shareholders of a company. It is used extensively in financial transactions, legal dealings, and compliance checks, and serves to establish the legitimacy and authority of individuals within a corporate entity. By ensuring transparency and trust in business relationships, it plays a crucial role in safeguarding both the company and its external stakeholders from potential fraud and unauthorized actions. That's it for today's video regarding certificates of incumbency. Thank you for sticking around until the end. Your support, as always, means a lot to us, and we hope you found the information, insights, and key points valuable. We'll continue to share informative content, so don't hesitate to return to the Global Business channel for insightful videos on the offshore, global, compliance, and financial services sectors. Take care, stay safe, and we'll catch you in the next one. Cheerios!